Hi everyone, today let's talk about Fed Waller, then we'll look at the calendars, the charts, then we'll look at my results and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Fed Waller came out today and said some pretty dovish things for the first time from the Fed in a really long time. And he mentioned here he thinks interest rates are likely high enough to bring inflation back down to 2%. That would illustrate that the Fed thinks we are now done with interest rate hikes. And that's not something we've heard from the Fed ever. So far, they've continued to say they had one more hike. They're going to look at the data. But markets had kind of snuffed out that we weren't going to get one more hike. We were expecting a pause all the way until the middle of next year. And then you got Fed Waller. They mention here that he is relatively hawkish compared to some of the other officials in the Fed. And you can see here he mentioned if inflation continues to cool for quote unquote several more months, and he doesn't know how long that's going to take, 3, 4, 5 months potentially, then we could start lowering the policy rate because inflation is lower. That is the first time we've heard a Fed official say that rates could potentially go lower, especially if the economy is not slowing. That is typically when they cut rates. Obviously, it's going to be based on inflation, but I do think it's a big deal we have a Fed official out here saying that they could potentially cut rates and that they are done hiking rates. They mention here, based on this analysis, they think those interest rate cuts could happen as early as the spring, again, assuming that interest rates continue to trend towards that 2% mark. And he said that he is increasingly confident that policy is now currently positioned to slow the economy back to 2%, meaning that they are done with interest rate hikes. And it's worth mentioning here that Jerome Powell has not said these comments. Chairman Powell said he is not confident that they have reached the terminal rate. So we have a little bit of disagreement between Jerome Powell and Fed Waller, but again, big deal in my opinion. Moving over here, I wanted to mention that Charlie Munger did pass away at the age of 99. He was obviously very old and we kind of expected that this was going to happen, but it's always a little bit of a shock. He finally did pass away, and we know that Berkshire Hathaway is going to be just fine. Charlie Munger, as well as Warren Buffett, have mentioned they have put plans in place to keep Berkshire strong and healthy for a long period of time, but he was absolutely one of the best investors of our time, and it is a sad loss. Moving over to the economic calendar, consumer confidence quite strong, above the forecast. Previous read was revised down, which was interesting, so maybe this one gets revised down also. Then we had the 7-year note coming out at 4.4%, about a 0.5% lower than the previous read. And then looking at tomorrow, we do have GDP numbers at 8:30 that could have a fairly big impact, and it is expected to be a very high number here at 4.9. Previous read 2.1. Price index also expected to be quite high at 3.5. And if these numbers are strong, that could really push markets higher tomorrow, in my opinion. Moving over to earnings just for a moment, I wanted to highlight that Intuit beat on the top and bottom lines. CrowdStrike also beating on the top and bottom lines. Salesforce is tomorrow after hours. That could be an interesting one to watch. Dollar Tree, that was one to watch more during the pandemic. Then you have Marvel, which is always an interesting growth story in the gaming space. Kroger always gives a pulse to the economy. So a couple of interesting earnings here towards the end of the week. Moving over to Max Payne, you can see here it is currently sitting at 450. That's a little bit higher than it was going into the week, up about $5. 455 call strike continues to be very strong. That is the highest strike of them all this week. Put strike down around 450, so that really gives you a tight range for the week. You also have some calls coming in at 460. That's a little bit higher than it was previously. You can see total options really jumped a lot here today, up to 1.26 million. Yesterday it was around 850,000, so big jump from yesterday to today. And again, this still looks a little bit more bearish in my opinion. Moving over to the charts, starting off with the S&Ps, really not a great story to tell here. It's been going sideways for several days in a row. About 5 days in the same price range, but really 4 days of straight sideways price action. You can see every time we touch this trend line on the daily chart, we reject from there. And sure enough, that happened again. And then on the hourly chart, we found some support there, rallied into the close. Again, I think GDP numbers could be a nice driver up to that 460 level. My next level to the upside is 457.57, and then you can see that upper trend line around 460 up to maybe 463 right at my level there. That could be your next resistance. Again, momentum continues to weaken, which is interesting, but GDP numbers can be a good catalyst for markets to go higher and really stimulate the bottom 490 stocks. we've really been driven by the top 10 stocks. And if those bottom 490 stocks start to participate, we could actually see markets push much, much higher from here. The question is always timing. Can we maintain all of this growth over the last month and then continue higher from this level? Moving over to the NASDAQ, very similar thesis, sideways chop for 5 days in a row. You can see this 389.54 level not really being respected. The real level here is 392.35 down to 387.05. We haven't tested that since Tuesday of last week. You can see that 144 EMA almost got tested in the pre-market, ended up rallying from that level, continuing to consolidate in this zone. You can see a really strong push at the end of the day on strong volume, which is interesting. Again, if GDP numbers are strong, I do think we could see a push higher. Momentum continues to wane here, though. That is really the big concern. Need to see a step up in momentum. That could give me some encouragement to get a little bit more bullish versus the hesitancy down to the 21 EMA, which does continue to trend higher pretty strongly each day. Steps up about $2 on the daily chart each day. But the risk there is that these EMAs start to consolidate on price. Then price gets below the EMAs, and then we see a more aggressive pullback, which is obviously going to be bearish for markets. Moving over to the Russell and the Dow, you can see the Russell continues to chop sideways. Support is 177.33. Tested that again today, found support there again. 179.17 continues to be resistance with your midpoint at 178.33. Continues to chop in that range. Momentum, basically nothing. RSI right in that 50 line, not giving any clear direction. If GDP numbers are strong, I would expect the Russell to be the most affected by that strength. And then you have the Dow actually showing pretty good movement here again today. The Dow has been really strong in comparison to the other major indices. You got a big strong candle on that first candle on the 4-hour chart, up 0.5%, pulled back about half of that, and then held there just above 353.68. It's one of the first times we've closed above that level. You can see we tried to here, pulled back in the pre-market on Monday, and then in the pre-market this morning, we got above that level, held above it, and then 356.43 is your next level to the upside. Again, momentum weak, RSI still in bullish territory, but did break down from overbought conditions, which is not a great indicator. As long as price continues to grind higher, this is still a melt up on the Dow. Moving over to Apple and Tesla. Apple up 0.33%, did get back above 189.96. It was below that on the close yesterday, but look at this momentum. It is only at 0.36. It is very close to bearish momentum. That is not great here on Apple. We've been talking about this for a while, but if this comes to fruition tomorrow or the next day, that's going to be an interesting indicator here for the markets. And then looking at Tesla, really, really strong day, 4.5%. Did not see that coming. We had been consolidating in this area. 232.57 held, and I said as long as this level holds, you can still be in a bullish position, which it did hold for all of these days. We never closed below it on the daily close. And then we got a step up here in momentum, step up here in volume, step above this downtrend line, which is interesting. Doesn't mean that we're going to break out. You can see we did have a move similar to this where we got above it, did kind of chop sideways, test that upper resistance line, and then we broke down further. We've been in this range a couple of times before, but this is interesting. Sideways consolidation, held the level, breakout. You do have to respect that. If you are trying to trade this to the downside, I would be out. But if you're trying to trade it to the bull side, you do have to be aware there is definitely some clear resistance at trend, sitting at 253. And then 255.44 is my horizontal resistance level right at this neckline here from 16 October. Moving over to staples and discretionaries. Staples had a strong day as well. 0.58 on that first candle. Pulled back half of that. Similar to the Dow. Held above this double top that we were looking at. Looks good as long as it holds above there. Looking at 70.85 continues to look good. The structure is still very bullish in my opinion. Staples have continued to look strong. Moving over to discretionaries, did not expect this perk up, but again, on the back of Tesla going higher, we are getting a little bit of a perk up here. Volume stepping up as well. Continues to hold trend. 170.68 is to the upside, and we've been holding above 166.78 for a while as long as that level holds. still watching for that next upside level. Moving over to communications and semis, we talked about these yesterday. These are not looking super great. Communications did look a little bit better here today, up about 0.25%, but momentum continues to step down. RSI not looking great. And looking at semis here, you can see this looks even worse, continues to roll over. Momentum looks like it's going to turn bearish tomorrow. RSI continuing to break down below the SMA. And if we do have one of the best performing sectors in semiconductors continuing to break down here, that should be weaker for major markets, and especially the NASDAQ. Moving over to breadth, 50-day average did touch my level now, 77.46, pulled back slightly, closed at the exact same level here from Friday. You can see that same close here on the 200-day average, as well as Tuesday here today. Momentum on both of these continues to roll lower, even with the bullish candle here today. Again, not a great indicator to the bull side. Doesn't mean that we can't get a step up. Absolutely you can. You can see we had 2 bearish days, step up, another bearish day, and then we got a resurgence, which did push us higher here. Doesn't mean that this can't resurge back into bullish momentum. You just have to continue to watch it. If it tips into bullish momentum tomorrow, that could be an indicator of higher prices. But right now, it does look like we are set for a pullback at some point over the next 2 to 3 days. Moving over to the 2-year and the 10-year, as you would expect with those comments today, yields went much lower. 2-year had a big bearish day, 3% down, took out that level, took out all those wicks, took out the 144. Looking down at the 200 SMA now at 4.66. Bearish momentum, bearish RSI. Everything looks weaker now on the 2-year yield with that big bear candle. 10-year also showing weakness, 1.48%. Took out that trend support right at the next trend support. Interesting. Retesting that downtrend line. We did get a step down on momentum as well. So we had been decreasing on bearish momentum. Then we got an increase here on Tuesday. If that follows through here tomorrow, we start to see a ramp up on bearish momentum for the 10-year yield. That could be bullish for markets. Again, another thing to be watching here. Looks like yields are showing more weakness off of the back of Fed Waller's comments. Moving over to the dollar here on the hourly and the daily, you can see we got another big bearish day. 0.44% took out that 1.3 level. We also got a step up on bearish momentum, similar to the 10-year yield. Hit oversold conditions here. Got a lower RSI read versus this previous low, so continues to look weak here. I have an intermediate level here at 102. Certainly could get into that zone. You can see we're wicking these highs from this consolidation at the beginning of August. You can see this pivot point at 102, probably should extend that out. And you can see that here now right at 102. I do think that that is an interesting level. Still have uptrend support at 101.7, so you would expect an overthrow to touch that level. But this continues to look very weak on the dollar, which gives equities a little bit more strength in my opinion. Moving over to JNK and TLT, as you would expect, both of these perked up quite a bit here today. JNK pushing towards that 92.50 level, TLT breaking out above trend, closing above it. You can see it's up more after hours, makes sense. People are starting to buy into that thesis where the Fed is done and could be cutting either in the spring or mid next year, which should give TLT some strength, which should also give a little bit of strength to financials who have really been hit by these higher interest rates. So interesting to see this strength in bonds, but it does make sense. Moving over to the MOVE index as well as the VIX. MOVE index really hasn't done much of anything here. It's chopped sideways for 2 days, giving basically no movement. But let's take a look at the VIX. Look at this massive wick that we got right to that trend line, touched the trend line and then rejected from there. You can see it's starting to find a little bit of strength in this zone. It is still below these wick lows and below my level at 1275, but this momentum continues to tick towards bullish. You do have to pay attention to that on the histogram. You also have RSI ticking up a little bit. We had the low on RSI from Friday of last week. RSI continues to tick a little bit higher each day. Again, it still could consolidate in this area for a while, just like we saw here. But it is interesting to start to see the VIX start to perk up a little bit, which could spell some weakness coming in markets over the next several days. Moving over to my accounts, you can see I made a little bit of money on the day. As you would expect, markets basically went sideways, which is fine when you're short premium like I am right now. I did roll down my call here from 79 to 78. Gave me a little bit more credit on that position, basically flat on the day, which makes sense, but not what you would want. Looking at the Qs, I did try to roll down this 386 down to 385 just for a little bit. Then markets kind of surged on me a little bit, so I rolled that back out in time and up one strike. So I still have $5.50 credit on that. And you can see I was still net profitable on that position. I still really want to be out of 200 of these shares and start to kind of reestablish myself. I'm still not sure whether I want to establish that as a higher covered call. I could roll this up and out a little bit to try to give myself a little bit more upside. But like I talked about on the charts, I am a little bit concerned that we could see a significant pullback down to the 21 or even a little bit lower if we don't break out from this consolidation that we're in right now. If we do break to the upside, obviously I'm going to roll up and out and try to get some more of that profit as we go higher. I do think that that is possible, but right now while we're in this consolidation, I do think the risk is to the downside, and that's why I have these calls on here, and so far that has worked out quite well over the last several days. Let me know down in the comment section what you thought of Fed Waller's comments. Will the Fed keep rates here, and how long will they do it? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.